Okay, it looks like we're back again. Okay, we'll try all that again. Nothing like a few technical issues on our first go, and we can say it all worked well in the tests. So we're talking about the shape of the market and the opportunities that are presented in the next 3 to 4 weeks for the stock market itself. I'm Jody Ellis, and I'm the CEO of Investor Centre. We produce a number of tools, including day trading and trading tigers. So from the point of this, it's a no specific advice session. It's general information only, and you should seek advice before taking any financial position. There's no warranty or guarantee given by the stock exchange or Investor Centre. We're not liable for any losses or damages, and in attending this presentation you accept full responsibility for any action that you take. I'll be talking about the trades that I'm going to do over the next 2 to 3 weeks. Now, we just want to have a look very quickly at the candidates and what they mean for the market. We'll do a map of the market over October, the remaining part of October and November. Have a look at gold, Aussie Dollar, S&P 500, Australia 200, China, and a bit of a map of 2021. Now, the important thing to remember is that an election, a US election year, which comes around every 4 years, has a different shape to other years, and it historically descends into the election, and we'll go through what a FUD cycle is, a fear, uncertainty, doubt cycle, and have a look at how that unfolds. But first we're going to talk about the candidates. Now we have Joe Biden. He's the Democratic Liberal left wing, and he's supported by the stock market primarily for resolving conflicts with China, and he's expected to take a much softer approach to China, and that will ease the conflicts, ease the tariff wars, and stimulate world economy, theoretically. Then we've got Republican and Donald Trump. He's conservative right wing. He's supported by the stock market primarily for his tax reforms, business initiatives. He's using trickle-down economics, where make big changes at the top and it flows down to everybody. Now, there's a lot to be said against trickle economics, and I know I've read a lot of literature against it, but I think in this instance, prior to C-19 and the COVID shutdown of everything, we can say that Donald Trump's trickle-down economics was actually successful, and the Americans had much lower unemployment, and business was stimulated by cutting taxes and working with businesses. Now, they're the two candidates that we think we're looking at, but for the first time in history, the VP nominee, Kamala Harris, is a significant question in this equation, and she is potentially the next President of the United States. The reason being is there's a lot of talk that Joe Biden, he's already said he's not going to run for the next election, but they're looking at Joe may stand down if he wins the election as early as June next year due to health reasons. And he's been struggling apparently with the pre-election run, and he's there to win the election, and then literally it's believed that he'll hand over the reins to Kamala Harris. Now that would make her the first potential ethnic woman president, and it's important to pay a bit of attention to her. Biden's saying that it's his policies going into the election that count, not necessarily the Democratic left wing. And on that basis, we have to look very carefully at Harris's views, because they don't all align with Joe Biden. Now, she's got a stand against defunding law enforcement, but she is anti-oil and energy. She's pro-green and pro-climate control. She's heavily pro-firearms restrictions. She wants to legalise cannabis. She's pro-immigration and decriminalisation of border breaches, and she's pro-ending the tariff war with China. So she's believed to have a soft approach to China. Now, if we want to actually cover a little bit of her background, we're talking about a woman with an Indian mother, a Jamaican father. She comes from a Hindu background as a practicing Hindu. She's also a Baptist from her Jamaican side, and she's currently married to a Jewish husband, and they're raising their children without religious nominations, I believe. It's worthwhile having a look at Kamala as a whole package and do your own research, because there's a lot of interesting things about this woman, how she got to where she is, and the fact that she could be leading the country, the US country, for the next 3.5 years. Now, this is a stock market mud map of what's going on, and we have an overall direction for the marketplace, and that started with the second debate, which was cancelled, and the US stock market normally runs up into that second debate and then runs down into the election from there. So we've been running down, and we've already had I think it's 8 consecutive lower closes as the US is going down, and that's right on the timetable with where we were positioned last week. Now, as we come into the second debate, which is for us tomorrow at 12 p.m, it's for Thursday night for the US market, and that's the next debate. We expect to go down into that debate, and then after the debate, which means Friday night, we're expected to go up in New York. So the market should rally at about that time, and then subside down into next week as we settle down for an approach to the election, which happens to be right on our Melbourne Cup day. So it'll be an interesting time for our stock market. As a trading tiger, some of you who are trading tigers know Melbourne Cup trade is our signature trade, and we normally go long for Melbourne Cup with the euphoria that generates. And this year we're facing US presidential election directly over the top of Melbourne Cup. It'll be a very interesting day, which should see up in the morning, down in the afternoon. But we'll talk about that a bit more next week. So then, after the election, we've got what would normally happen is we'll have one of the presidential candidates will declare victory, and then the market would rally regardless of the winner. So a Trump victory in 2016 was a sensational trade for those of us who were there for that, and we were long for the victory, and it was enormous. However, the rally in the market would have been the same had Hillary won. It's a pattern of fear, uncertainty, and doubt versus certainty. Now, the question this year is certainty. What's happened is Donald Trump has already laid the foundations in the last 4 weeks of challenging the postal result. And the reason the Democrats are all upset about the nomination of a Republican biased judge to the Supreme Court is that in 2000, We had George Bush won on the 12th of December by a Supreme Court ruling, not from the overall count of votes from the elections. And that remained hotly contested, but to this day it's still disputed that George Bush didn't win that election, but he won it in federal court. And everything's been set up for Donald Trump to immediately challenge Joe Biden should he declare victory, and then test the electoral voting system and the postal voting system in the Supreme Court, dominated by Republican judges at the present time. So that uncertainty would then do what happened in 2000, and it saw the market go down substantially before there was a winner declared. So if we have a look at the fear, uncertainty and doubt pattern, we can see that sellers overpower buyers when they're uncertain about the outcome. Now, going into this particular US election, it's probably the most significant US election since the start of World War II. And we have conflict with China, a number of the pandemic, and a number of pressing issues that the United States is leading into, and certainly Australia will follow. Now, as we go into this election, the uncertainty of the outcome will mean that there will be sellers in stocks, so top 200 stocks in Australia, top 500 stocks in the US, and that will place downward pressure on the market. It won't be a lack of buyers, but there will be substantially less buyers. People who are thinking about buying stocks are now likely to wait until the election to see what happens. But people who are worried about the election, it's a call to action to sell. Consequently, if we can see that line, the fair value line, right, the market should be at this value here, but sellers overpower buyers on emotion, and then we have the election, and then as long as there is a quick known outcome, the market will rally back at about twice the speed that it fell down to that fair value point again. And that historically has been very, very quick and very, very accurate. It's almost exactly 2 weeks. So we can measure from the fall that we've already started in the US market back to where it's likely to go within 2 weeks of a declaration of victory by a presidential candidate. Now, if we have a look at the 2016 election, we can see that the market started to fall 4 weeks out. Then we got to the second debate, and after the second debate, the market fell into the election, rallied up on the Friday, and then there was the Tuesday, Donald Trump declared victory, the market rallied, and we can see there it took off. Within 2 weeks, we were back to where we had been 4 weeks prior to that. Now, that pattern is true for 9 of the last 11 elections. And we can't go back further than that. So we're talking about 40 odd years. We can't go back further than that because prior to that, elections were held in March, and so we had different patterns. This is a November election, US election pattern. Now, gold in the 2016 election had a similar pattern. It went down into the election, and you would think that gold would be a fear response, but it goes down into the election, rallies in that very few days of uncertainty, and then after the election it goes down. And there's gold in 2012, once again the same pattern, went down just a few days before the election, it rallied, and then rallied significantly, and then went down after the election. So we're expecting gold from this point to decrease from about $1,930 US and slip back a bit, then suddenly rally just before the election, and then slip after the election. The slip after the election isn't that exciting for us, because gold is a different shape now than it was 10 years ago, but certainly the rally in uncertainty is highly likely, and that's a trade that we'll also discuss next Tuesday. Now, the Aussie dollar. The Aussie dollar rises into the US election and then generally falls after the election. Now, it's the Aussie dollar, US dollar we're talking about here. So we can reverse the equation and say, I'm showing you a chart of Aussie dollar, but if we showed you a chart of US dollar versus Aussie dollar, that would be more correct. The US dollar value falls into the US election and then rallies after the US election on a known outcome. So consequently, as the US dollar falls, Aussie dollar rises, and as the US dollar rises, Aussie dollar falls, and it gives us that election curve on the US dollar. And I'm currently long on the Australian dollar as we speak, from 70.5, and that was yesterday. And you can take up a position on the Aussie dollar, US dollar, anywhere sub 72 cents. Our target is 73 cents for this election. Now China, we've got a bit of a compression. We've got our long-term growth, and the expectation for this election is that the Biden-Harris victory would see the Chinese market rally, and a Trump victory will see the Chinese market fall. Now, the Chinese market, it's very important to note there was a huge rally in here, and that was where the Chinese Communist Party celebrated 90 years of communist government, and they did that by inserting $3 trillion US into government-owned equities in the Chinese market. Now that's created a bit of a disparity over there, because stocks that didn't have high content government participation didn't receive any funds, but stocks that were controlled at least 50% by the Chinese government did benefit from that. The market literally stood on its head and went straight up for the celebrations we can see, and we've been in consolidation just below 16,000 points ever since then. Now it's only been today that we've actually got up into 16,100, and traditionally the election is worth about 750 points. So 16,750 is where the Chinese market should go on this. That constitutes a trade in the marketplace, and once again on Tuesday we'll outline the details of that exact trade. Now, what's expected to happen? I did a talk for the AIA in 2016 and detailed what an election year, US presidential election year looks like, and this is a frame from that talk in 2016. And we're up into January, down into March, up into June, flat through June, July, up into the second week of October, down into the election, the first week of November. After the election is decided, the market rallies into the US presidential inauguration in January. We reach a high in January, February, and then it goes down into March. So let's have a look how we've gone. This is the pattern so far for this year, where we think everything's out of shape and shouldn't be working because of COVID, because of Chinese tariffs, because of problems in the South China Sea, etc. But we have a look at that 2016 frame, up into January, down into March, up into the beginning of June, flat across June, July, up into the second week of October, then down into the first week of November, and then up after the election into January, February, and down into March 2021. Now, so far so good for this. Now, that fall was substantially bigger than we would normally have expected because of COVID, and the timing wasn't quite precise, but the recovery was almost exact. And then we had that big flat period through June, July, and then we've gone up into October with the US market, up into October with the Australian market, and then now we've seen, just as we expected last week, the US market start to fall after the 15th, and that's exactly what it's done. And our market failed to breach 62.50 and is now slipping back towards 6,000 points as we speak. So there's the ASX in 2012. There's the ASX in 2016. We can see down into the US election again, up into, there's the rally back, and there's the move up into January and down into March. Now this is China in 2012, and that's its 750 point gain after the US election into the first week of December. Here's 2016, and once again into the first week of December, 750 point gain after the US election. So there was the US election there, and at the moment China is just pressing that 16,000 there. After the US election, we're expecting another 750 points. Now the China A50 index that we use on City Index, that trades at 1 point is $1 US. If you take one only contract, you stand to make $750 US, to $1,500 US. It's certainly a trade that we'll be looking at very strongly, and we'll discuss that on Tuesday next week without the technical problems that we've experienced today. Now, this is the US market recovery, and what's expected is once we declare a winner, the market will accelerate back to 35.50. There's the 3rd of November. Now, what we don't know and what we are expecting is a no clear winner scenario. We are expecting the market to fall on no clear winner, so we could say none of the above, and it will only be when that dispute is resolved that we will actually get an outcome. The problem here with a no clear winner is it's very hard to capitalise on. The no clear winner means going short after the election, and then when there's a winner going to be declared, unfortunately, we know there's no inside trading, but there are a lot of institutions that know before an announcement is made, and so consequently the market rallies very quickly before we can even get on. And if you remember when we had the Australian election that had a hung parliament, the market took off at about 10 past 10, but the announcement was made at 12 o'clock, and the market went up literally 120 points prior to the announcement being made as to there being a parliament formed. Now, the S&P 500, we're getting into that 34.30, 34.40 zone. We had the issue this morning that the Iranians have been busted for hacking the postal voting system over in the States, and consequently the market dropped very quickly. It's recovering some now, and we're expecting the US market to be either flat or down again tonight going into the US presidential election, but the potential low prior to the election is 3345. Now, if we have any sort of incident that will upset the market, it could go down as 3300, and I'll tell you straight up, I've already got buy orders at 3,300 on the S&P 500. So if the market does drop to 3,300, I'm long no matter what, and I really don't care how far it goes down. Then I'll hold on, because I know that somewhere along the line it will be back very quickly this year to 35.50. That's not including nuclear detonation in New York or China attack on Taiwan. Those sort of things will wreck the plan. But other than that, the market will go back to 35.50 as it has in every other US election bar two. So we'll get high volatility in the market on Tuesday and Tuesday night in last minute speculations, and that high volatility could see the S&P move as much as 70 points in either direction, which is a fairly big move for the S&P. So when we talk correctional moves in an index, you normally talk 2%. If the market moves more than 2% in a single direction, that's a substantial move, because indexes normally move at about 0.5% on a daily basis. So 2% is substantial. But on that Tuesday night, the market will be able to move 2% in either direction, giving you a range of 4% overall. Once we get a clear winner, we can take the risk and run before there's the announcement. That'll get you maximum profit, but exposes you to risk. Or we wait for a winner is declared. Hopefully the winner is declared and the market's travelling in that 34.50 zone, and that still gives us about 100 points of S&P over the following week. The Australia 200 is resistant to falls during this period for the US market, and so we see that the US market is likely to fall more going into the election, and it's likely to rise faster after the election. That creates a disparity between the Australia 200 and the S&P 500. Now, in your day trading manual, for those of you who've got the 2020 day trading manual, on page 31 of that manual, we talk about inversion trades, and old tigers will remember the inversion trade. We haven't seen much of the inversion trade in recent times because it's been very perilous, but in this particular instance we can look at an inversion trade very successfully in these two markets. The basis of an inversion trade is to go long the strong and short the weak, and we already know absolutely that the Australian market will be the stronger index running into the US election. We also know absolutely that the US market will be the strong index coming out of the election once somebody has decided who the president is. So what we can do from next week is go long the ASX and short the US market and create an arbitrage between the two markets. And we can run that. You can run it now, but the danger here is that the US market will rally on Friday night after the second debate, and our market has no obligation to match that rally going into a weekend. So we'll wait till next week. On Tuesday, we'll be structuring the trade for you so that you can actually come back live and have a look and see how it's done. And we'll be using City Index to structure those with the S&P 500 CFD and the Australia 200 CFD. Now, for the inversion trade, we've got to factor in the relationships of value, which is basically about 2 to 1, and the relationship of currency, and we're trading at about 71 cents US at the moment. But the easy way to work it at this stage is we use one Australia 200 December CFD, and we can use two US S&P 500 CFDs against it. Now, that makes it slightly biased towards the US outcome, and that really doesn't hurt us here because we really are trading the US market and using the Australian market to balance it out. So we don't, in an inversion trade, place any stops. We are long and short. How does that work? Yep, we are long and short. So if the market goes down, if they're perfectly matched, we shouldn't make or lose anything. But what will happen is the weaker one will go down harder, and then the stronger one will go up harder. The weaker one will fall more, the stronger one doesn't fall as much, and that gives you profit. When we come out of the election, it'll be the S&P that goes up, and the Australian market won't go up as much, and that will create a disparity, and that becomes the arbitrage or profit for the trade, where we have literally a no-loss scenario. Now, our target on each of the trades that are coming up will be about 10% of your account value. We'll structure the trade, and once we get the trade, so if we're trading with $10,000, we'll be aiming to make about $1,000 on the few days running into the election, and then after the election, making $1,000 on a $10,000 account coming out of that. And we don't need to be in the trade very long to achieve those inversion goals. We can't hold the inversion for an extended period of time because ultimately the two markets must catch up. There's one thing that we have to talk about here that is going to affect us. The China factor has become substantially more significant in the last 4 weeks. Now, there's been a lot of news with China escalating issues in the world markets, and the Australian media is ignoring it. And I suspect they're being told to don't upset the boat as we're trying to recover from COVID and lockdown, and consequently 90% of all the news you're seeing at the moment is COVID in Melbourne, with a little bit of there's COVID in Sydney, and not much else is happening for the media. There's been a few things that have happened. You can look them up. I tweeted one the other day. The Chinese government has put a ban on Australian coking coal, and consequently said that the power stations over there cannot use any coking coal. We've got 7 million tonnes of coal at port in China that's not to be unloaded, and we've got a further 10 million tonnes of coal en route to China, which is not going to be received. There hasn't been very much on that, and that's a big escalation. There's a further rumour that China's looking to extend that ban to some of our soy products, and soy and coking coal. China is our biggest partner, trading partner for those two, and that will have a big effect on us. It's not been in the Australian media very much at all, but if you Google it, you can have a look at what's going on. Interestingly, tensions have raised dramatically with Taiwan in the last week, and you had the Chinese consulate personnel assaulting Taiwan consulate personnel at a function in Fiji where they celebrated Taiwan Federation Day, and in response to the police attending and arresting the Chinese diplomats there, the Chinese flew across the Taiwanese airspace border with something like 11 squadrons of fighter planes, more than 40 combat aircraft flew to Taiwan as a threat display after that very event. This has all happened in the last few days. So things are escalating. You can have a look and watch some of the American news and watch some of the Asian news. You see things that China's doing that we do not get here. Also, of course, China has lodged a protest against Australia for participating in the upcoming naval exercise with India Japan and America in the South China Sea. They didn't protest anybody else, they just protested that Australia was there. So we're coming into more and more direct conflict with China as things escalate. I'll pose a hypothetical to you. If China was to proceed with a further escalation of Taiwan, then an undecided US presidential election with an apparent leadership issue would be a perfect time for China to exercise some sort of military conflict. It's a concept. Okay, that's all for us today. Sorry about the technical issues. I've gone over time. This was meant to be around about 30 minutes, and it's been a little bit higher. You can watch me on Twitter, and I tweet about stock tips, some of the things that are going on in the market, some trades, some things that are going to happen during the day, etc. And it's useful, it's free of charge, and it's Jody Ellis at icotstocks.com.au. We've got Global Reporter. Now, we've just finished the audit on Global Reporter for this last financial year, and despite COVID, we scored a 63% accuracy, and we got 2,204% return. Now, if you want to have a look at all those individual trades, I'm not sure they're on the website at the moment, but if you're wanting the full record of trades for the last 3 years, you can send an email to admin, A-D-M-I-N, at investorcenter.com.au, and you can request that spreadsheet. And we're just going through a revamp of our website, but I might see if we can get that up there as well. Now, our day trading account, which starts with $10,000 every year, has a current balance of $62,400, and the history, the monthly trades for day trading are all up on the website. That's right, isn't it, Stephen? Yep, all up on the website. Now, the trades for next week, we're going to be talking about the inversion trade, the US S&P 500 short. There'll be a gold trade that we can have a go at, the China A50 trade, where we're going to try and get that 750 points, and we'll discuss these at 4 p.m. Sydney time on Tuesday the 27th. Have your trading account ready. Now, if you don't have a trading account and you're not ready to take advantage of these things, contact admin on admin@investorcenter.com.au, or you can phone the office 1300 132 999, and Trish will be able to help you get an account set up for the opportunities here. Literally, we're looking at a potential, if you think about trading with even a couple of $1,000, you're talking about a potential to earn 50 to 100% of your account in the next 2 to 3 weeks. It's a very good trading time, only comes around once every 4 years, and a big opportunity. Thank you for joining me. Hope you enjoyed this, and press the like button on Facebook so that we can see that you like it, and I'll speak to you next Tuesday about the details of these trades. Thank you.